For the following balance sheet of Moon Limited Company, prepare schedule changes in working capital. Then statement of sources and application of funds. This is related to funds flow statement. I'll read out first adjustments. During the year ended 31st March 2020, an interim dividend paid 26,000 was paid. So all adjustments should be double entry. One paid means application of funds, received means sources of funds. So one entry in fund flow statement and one more entry, whatever paid from profit we are writing adjusted profit loss account. That means non-operating expenditures, non-operating expenses and non-operating income in adjusted profit loss account. The assets of another company were purchased rupees 60,000 payable in fully paid shares. Some companies issuing shares. In return, these assets consist of stock. They are receiving, company is receiving stock. Whatever opening stock, for that we are adding, because we are issuing shares, and that we are receiving stock from different company. Machinery also we are receiving, and goodwill also we are receiving. So that means we are purchasing goodwill, but it is not non-operating income. This means, in addition, sundry purchase of land made rupees 5,650. Again, we purchase some plant, adjustment double entry, 5,650 in plant and machinery account. So plant and machinery account, one entry here and one more entry in fund flow statement, application of funds, because we paid to purchase plant. Income tax paid during the year, that is also double entry. So provision for tax in question, that is there. So I'll write income tax, one more here. So this income tax and adjusted profit loss account also, provision for tax here also, application of funds. What we paid here, application of funds. Say sundry creditors, bills payable, sundry creditors, opening 39,500, closing 41,135, bills payable 33,780, 11,525, bank overdraft 59,510, here not paid, that means paid. So provision for taxation, this is a liability. So we are opening credit side to balance brought down 40,000, to balance carried out 50,000. Reserves, so there is no difference. In management account we need difference amount, here there is no difference. So 50,000 don't write. Profit loss account, this is also adjusted profit loss account, opening 39,690, closing 41,220. Share capital, so some adjustments is there, that's why I am writing working note. Share capital 2 lakh, closing 2,60,000. No adjustment. Sorry, asset side, cash at bank 2,500, 2,700, closing. Sundry debtors 85,175, 72,625. Sundry advances 2,315, 735, closing. Stock, I am not writing opening because adjustment is there, so I am writing closing only for 97,370. Land and building 1,48,500, 1,44,250. That means, see here in adjustment there is no word land and building, so it's a small difference. So compared to land and building, so depreciation is not provided. If it's a huge difference, I will write sale. Now it is decreased because of depreciation. Opening for 1,48,500, so closing 1,44,250. So that difference should be depreciation. That difference should be 4,250. So to depreciation, non-operating expenditure on land and building 4,250. Plant and machinery adjustment is there. So asset debit side 1,12,950. So 1,16,200. Goodwill Goodwill also, so opening is not there, but closing 20,000. This is. Now the following additional information is available. During the year ended 31st March 2020, an interim dividend of rupees 26,000 was paid. So paid means what here, all right? Interim dividend paid. How much of 26,000? So one more entry, non-operating expenditure. 2 interim dividend paid 20,000. So our entry is over. Sorry, 26,000. The assets of another company were purchased for rupees 60,000 payable in fully paid shares of the company. These assets consist of, see, they are issuing a fully paid shares of the company. The assets of other company were purchased rupees 60,000 payable in fully paid shares of the company. The assets consist of stock, so they are receiving debit. What comes in stock? 21,640. See, debit. I'll write journal entry for this to know what is actual journal entry. Stock we are receiving. Company is receiving stock. Stock 21,640. Machinery 18,360. Goodwill account at 20,000. So this all debit to equity shares. So equity share capital 60,000. See, the assets of our company were purchased for rupees 60,000 payable in fully paid shares of the company. These assets consist of stock. So we are preparing to equity share. See, we are no adjustment is over. Income tax paid. Right. And second adjustment. So journal entry stock we are receiving machinery, goodwill to equity share capital. Debit what comes in, credit what goes out. So we are purchasing. So we are preparing to equity share capital account. So equity share capital account. So 2 becomes by stock 21,640, machinery 18,360, goodwill 20,000. So one entry, right? So we are preparing goodwill account also. So goodwill becomes here, by goodwill becomes to share capital. That is 20,000. Our entry is over. So this is over. Machinery account we are preparing. So machinery account Y becomes to share capital 18,360. Then stock. So stock we are adding. So 21,640. So stock original value 1,11,040 plus again we received stock of rupees 21,640. 21,640 total 86 to 1,32,680. 680, that is stock. So next last adjustment, income tax paid to the year 25,000. Income tax paid application of funds because we paid amount 25,000. So income tax. So here also 2 double entry bank in bracket income tax paid, so 25,000. So double entry is also all adjustments are over. Now it goes. So this total 2,500 2,500 plus 85,175 plus 2,315 plus 1,32,680. So 2,22,670. That's correct. Now A minus B is total 2,22,670 minus 1,32,790. So 89,880. So this is the working capital 880. Next here 1,73,430 430 minus 52,660. 1,20,770. On this. So one more last adjustments, that is purchase of plant. So purchase of plant becomes to bank 5,651 entry, application of funds, that is purchase of plant 5,650. So now plant and machinery depreciation should be again difference because I am neglecting this last adjustments. Now total of all this, so the opening, share capital and purchase, total 1,36,960. Say 1,39,960. The difference should be 20,760, that is depreciation. So in plant and machinery, so 20,000 land is depreciated. So I'll write 20,760 as depreciation. I transfer here. Now everything should be closed. So this is increase in working capital. We need this much. So increase means we need. So we need amount only. That's why increase in working capital 30,890. So now from this total 1,27,230 adjusted profit loss account. Difference should be to 87,540 that we are receiving. So fund from operation 87,540. So total 87,540. So this is question number 7.